Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the S&P 500 Index. We're at a critical juncture now. Yesterday, the S&P did manage to rebound from the front end of the cloud. It will be critical for the market to remain above this zone. This is kind of a line in the sand from a cloud chart perspective, because any price action below the cloud will change the outlook to bearish. So if the S&P dips below the bottom end of the cloud here, there's potential downside risk to the next level of support, which is this bottom end cloud chart support level, roughly at 4,600 zone. So it will be critical to see for the market to rebound from this 4,650. If not, then it's going to dip back down through the bottom end of the cloud, and then the outlook changes to bearish. So then there'll be only short-term swing trades from rebound potential at these cloud chart levels. There's another key support level here, bottom end cloud chart support level back here. So it's quite a big drop down from this level to the next major cloud chart support level. So the market's at risk of moving its outlook into bearish territory if the price action slices and closes and keeps trading below the bottom end of the cloud here. So that's something to look out for on the 4-hour S&P chart. Now we'll look at the daily. The daily chart's still okay. Price action still above the top end of the cloud here. So that's still, the rally's still intact here, but we do have downside risk to these levels. Watch out the front level of the cloud. That support zone is being tested. You see we did get a rebound there. There is downside risk on the S&P to dip into these cloud chart levels there, test 4626, and then the bottom end of the cloud here at top end of the cloud here, sorry, at 4612. So these are the cluster of support at the top end of the cloud, and then if the support fails here, then it's going to dip into these bottom end cloud chart support levels here at the bottom end of the cloud. But the rally's still okay on the daily. Price action above the cloud is still bullish. It's just the 4-hour that we're very worried about. Looking to the weekly chart, you can see front end cloud chart levels there. Downside risk to 4,523. If we move into negative bearish outlook on the daily, then the downside risk, we look for these downside risk targets on the weekly chart, as well as this front end cloud chart level there. So as long as the S&P stays above the daily cloud, the rally's okay. But as soon as we dip below the bottom end of the daily cloud, then we start looking at these downside risk targets on the weekly. Now turning to the monthly and quarterly, you can see how extended this market is. It is really ripe for a much larger, deeper consolidation. And if we look at the quarterly, we can see that this market's very, very extended. It's very far away from the top end of the cloud here. So it is actually ripe for quite a hefty correction. So those are the downside risk views from a really big picture perspective. But for the time being on the daily, watch out for potential rebound from these cloud chart levels. If the support fails at 4650, then we might dip into test 4626 or 4618 or 46112. So those are the downside risk targets to keep an eye on for a potential rebound in the market if support fails to come in at this 4650. Until next time, happy cloud chart trading. Bye for now.